24/7. My name is Niharika Varya Bhatnagar and I'm with you with the era of AFM, that is Accounting and Financial Management for Bankers. Today I'll be talking about the next level of this examination. Another set of questions, but this time I have added questions from the module D as well. That was the only module which was left. So module A plus module B. I think today we have more of module D as well to balance it out, and a few questions of module C. So it's going to be a blend of all the modules all together. So let's discuss the questions. Here comes the first question. Accounting standards are basis for selection of accounting policy, set of broad accounting policies to be followed by an entity, basis of establishing and managing an entity, or all of the above. Accounting standards are for what reason? Accounting standards have been made for a specific reason only. That these were related to the era of getting uniformity in the era, to have a proper method which is followed by the entire country altogether. Now, though, it is something that we are managing and meeting up at the international level as well. है ना? So when we talk about accounting standards, what do? They are basically helping in the area of accounting policies, help in the area of all of these things all together. Okay, basically now first is selection. Yeah, in terms of accounting policies, they actually give you the choices which kind of accounting policies you want to choose, because accounting standards specify the methods to be used. Even method A, B, C and D, according to them you can use any of these four methods, and if any of these methods is used by you, you have to disclose. ठीक है ना? Next is all of the above. Next question. Substance of a transaction should be considered while recording them, and not only the legal form is the statement which holds the true for. Substance over form, disclosure of accounting policies, both A and B or none of the three. Substance of any transaction should be considered while recording them. Okay, now what should be the answer there? The position in terms of substance over form is the proof. Everyone, I just said that we are considering to take that particular land, but we have started working upon it. I said that documentation are yet to be received, but I've started my construction. It simply means only the documentation is left. The land has already been taken. Advance was paid, and only in the namesake the last or leg of the formalities is left. Always look at the substance in terms of ind AS. Ind AS doesn't work upon that part of that is we need to wait for the things to be proved, documentation to be done. No, it talks clearly substance over form. The proof should be visible. If the proof is visible, sorted. If it is not, then it is not worth taking. So in this case, first is substance over form. It should be recorded them and not in the legal form. It is clearly related to the substance over form only. Nothing related to disclosure. Disclosure means anything that is happening, you let people know about it, right? Next question. This is an easier question. We have talked about it in different classes at different levels. When we talk about this, what is the order in which the accounting transactions and events are recorded in the book? Everyone, what was the accounting cycle? First of all, we will record things individually. A happened, B happened, 3 happened. Noted down all the transactions. Then we took them to a table. Then we made a statement in which we recorded all the elements. Then we decided to prepare to find out whether we are making a profit or a loss. And then we made the final statement. So in this case, what is the order in which the accounting transactions and events are recorded in the books? Journal, sub-C, ledger, balance sheet, profit and loss. Ledger, journal, ledger, journal, ledger has been repeated twice. So obviously this one's out, because there is no need to have two ledger twice. Then journal, ledger, P&L and balance sheet, and P&L, ledger, balance sheet and journal. Okay, in this case, first is individual transaction, then is ledger, then is P&L, and then is balance sheet. So the actual thing is recording things individually, then making a table, then making profit and loss, finding it out, and then preparing the balance sheet. Okay? According to the money measurement concept, currency transactions and events are recorded in the books of accounts. In the ruling currency of the country in which the books are prepared, the currency is set by the Ministry of Finance or the currency set by the government. How does it matter? In our country, there is only thing, one and only thing is we have only one set of currency. The money measurement concept talks about whenever Indian financial statements are prepared, we are going to prepare it in rupees, not in any other form. So in this case, the basic is currency transactions and events are recorded in the domestic currency of that particular country. Okay, nothing else. For example, in India we have rupee, in USA we have dollars, in Japan we have yen, in England we have pound. So all these currencies are there now. Okay. Recently, I think that's a point there. Recently, in the given quarter, it was stated that the Afghani currency has basically been the strongest in this last quarter. Currencies really depend upon the economy of that country. That depends upon the multiple factors to be considered. That specific economy, its status in the entire world, internationally, and multiple things. These are two of the major reasons for which the currency is going to be stronger in the market. You know? Then, acha, there is one more point there. A businessman purchased goods worth rupees 25 lakhs. That is a part. The previous question was from module C. Now moving on to the module A again. The businessman purchased goods for rupees 25 lakh and sold it at 70% of such goods during the year. Acha. Out of 25 lakh, everyone, out of this 25 lakh, he has sold 70% of it. Okay. If I look at it, it's 25 lakhs and 70% of it, 25 lakhs, 70% of it is sold. We are left with 30%, है we are left with 25 lakh minus, we're left with 7 lakh 50,000. The value of the goods is actually 7 lakh 50,000. Okay, they have stated it. Then they said the market value of the remaining is 5 lakh. That means the cost was 7 lakh 50,000, but the market value, realizable value today has declined. There is a clear-cut loss, isn't it? So it is money measurement concept, conservatism, cost concept, or periodicity. According to this scenario, this is AS2. Cost or NRV. I hope it is visible. Huh? Cost or NRV, whichever is less. Okay, this is based upon whichever is less. Money measurement, conservatism, cost or periodicity. I'll call this particular cost or market value. This is based upon conservatism. We are too scared of recording something at above the cost or above the true value, which will definitely mislead the people who are looking at the books of accounts. Na? That would be wrong to misguide them that we are having goods worth rupees 7 lakh 50 while the value has already declined to 5 lakh. Okay. It is conservatism concept followed in this case. Acha, what do you mean by conservatism, everyone? How do we define the term conservatism? Conservatism says anticipate the losses but not profits. That's the basic rule. Done, everyone? Now let's move on to the next point. So this is a little longer question, so I hope it's visible now. The last point isn't. So let me see what I can do about it. Visible now? Done, everyone? Mr. Sai and Sons, which was registered in 2004, for has been okay for, has been following the LIFO method of valuation. LIFO is last in, first out. It changed the method LIFO to FIFO, first in, first out. The one which came last has been taken or used first. Last in, first out, or FIFO. First in, first out. We decided to move to that. In actual, LIFO is not the one which is used by inventories at all. They have stopped using this method. It is stated, it's like a type which is stated but not used. The auditor raised the objection to this change of the method in terms of valuation of investments. The objection of auditor is justified because change in method should be done only with the consent of auditor. Method of change on FIFO to LIFO, only to FIFO to LIFO, not vice versa. Change in method should be done only if it is required by some statute, or change would result in appropriate presentation of financial statements, or method cannot be changed under any circumstances. D is completely wrong. There is nothing wrong in changing the methods. Always remember, there is nothing wrong in changing the methods. You want to change the methods, you can, but you need to know that what are the methods which are duly acceptable. ठीक है ना? The methods which are duly acceptable. So in this case, it is C. If the law states that it is for a better presentation, then you should go for it. There is no harm in doing the change. Such change which are required to make the particular classification better, to show it in a better way, you should do that. That is allowed. Consistency doesn't mean that you cannot go through the changes. It means if you have changed once, the next change should not be made very frequently. ठीक है ना? Next point, cash flow. Next point, cash flow example from financing activities: payment of dividends, receipt of dividend on investments, cash receipt from customers, or purchase of fixed assets. What should be the answer? Cash flow example of financing. Financing is all about raising finances for the organization. That means either we get money or get finances for expansion and work, all, and long term only. Financing is only for long term. Payment of dividends, receipt of dividend, cash received from customer, or purchases of fixed assets. Cash flow is payment of dividends is for everyone. This is a financing activity for every company. Why? You have shareholders, you have to keep them happy. If they are not happy, they will screw the company altogether. If they are not happy, they will sell their shares. They will definitely reduce the demand. The price of that particular share will fall drastically in the market. So you have to keep your shareholders happy, right? So you have to pay dividend. Then the area of receipt of dividend on investments, and we have cash received from the customers. Then we have purchase of fixed assets. This is an investing activity. Cash received from customer, regular working, it's an operating activity. This is also an investing activity. Payment of dividend is what we call an example of financing activity. Which item comes under financial activities in the cash flow? Redemption of preference shares, issue of preference shares, interest paid, or all of the above? Which item comes under the activities of financial activities? Matlab, financial activities are again for raising the organizational funds. Then first is redemption of preference shares. We are paying off the preference shares. Yeah, they give us funds. So long term ones, there, true. Issue of preference shares. This is a minus item because we pay off. From the second one, we gain, so it's a plus. Interest paid, we pay, so this is a minus. So all of the above are financial activities. It is all of the above. Next point, equity 90, liabilities 60, profit for the year 20. What is the value of total assets, everyone? This is a trick question. They haven't given you even a single clue about the assets, and they have given you entire details of the liabilities. So what should we do about this question, everyone? Go through it. It says equity is 90, liabilities are 60, profits of the year are 20, and what is the total assets? Okay, let's discuss this part. Uh, 90 is the capital, 60 is outsiders' money, but along with capital, we also include the reserves and surplus. So this is also to be included. So this would turn out to be 1,70,000. Why? Because total liability is equal to total assets. Done? So the answer is 1,70,000. What is the value of cost of goods sold from the following? Net sales, GP, what would be the answer? Okay, let me discuss a very interesting trick with you. Whenever you are given a percentage on cost and you want to know the percentage on sales, you do have no clue about it, what do? Whatever, this is 33.33 now, this is 1/3 in the fraction. Since we are not given what would be the value in terms of sales, 1/3 of cost will turn out to be 1/3 plus 1. Just add 1 in the denominator. It will be 1/4 of sales. This is 70,000, 1,50,000, 75, or 67. So in this case, what's going to be the answer? It's going to be 1 lakh, and we are deducting 1/4 of it. So basically, 1/4 of sales, the answer would be, we have to find the cost of goods sold now. Yeah. So in this case, GP is going to be 25,000. If out of rupees 1 lakh, our GP is 25, then our cost is remaining, that is 75. So in this case, the answer should be C. That's a trick question. That's a trick to solve it in a simpler and a quicker manner. If anything is given on cost, if you want to move from cost to sales, add 1 in denominator. If you want to come back from sales to cost, deduct 1 from denominator. From sales, because from sales to cost, you reduce the profit. From cost to sales, you add the profit. Done, everyone? So that's the answer. Okay. Visible now? This is another way of doing the question. Whatever way you feel that you can find the question, you should go ahead and try it out. Next question. The capital gain tax liability arises when the following conditions get satisfied. There should be a capital asset, there should be a transfer, there should be in the previous year, all of the above. The transfer should be made in one particular year itself. Now everyone, if we are doing anything in this year, then it would be taxable in this year. Otherwise it won't be. You know? Otherwise it would be taxable in any other year. So in this case, the answer is going to be all of the above. This is defined under Section 45 of Income Tax Act. Of Income Tax Act 1961. Next question. Dash can be carried forwarded to set off even though return of loss has not been filed before the due date. Everyone, normally na, you can, if you had faced if the organization faced a specific loss and it could not be set off in this year, you take it to the next year. You are allowed to carry forward it to the next year. But for this particular purpose, they say if you file the return in time, only then that would be allowed. But there are certain losses which can be still continued. That is loss from business. Business loss cannot be done doing that. Unabsorbed depreciation, income from other sources, or loss from capital gain. The answer would be unabsorbed depreciation. This depreciation is going to be the answer. Done. Next question. Loss from house property can be set off against. House property, I would say, is a very friendly topic to look forward to. Now they have made that in terms of set off, it can be set off against any other head, only up to the limit of rupees 2 lakh. Otherwise, it's not allowed. But then, if you look at the losses from house property, for example, everyone, we have 5 heads. Let's learn it with a particular story. Once a man started working, he started earning salary. Then he decided to make his dream house. So he made his house property. He wanted to make his dream home. In the dream home, he prepared a few extra rooms, and he said that now my wife can work here and she can start her own business. She started one. So there, from the business, she sold one of her assets that she was using. They had a capital gain. Oh, sorry. Missed out the point. She started her business first now. So with the business, she started the era of profit and gains. That is profit and gains from business and profession. And 1, 2, 3, 4th is capital gain. And last is other sources. Okay. Loss from the house property can be set off against salary, any head of the income, capital gain, or income from other house property only. Losses from capital. House property is a very generous head. This head is basically working upon the scenario. Acha, we were talking about the story now. I was writing it all. When there was an average middle class person, he started earning salary. Then he made his dream home. He got married. Then his wife started a business. Then in the business, she sold any of the assets. She made profit. That was the era of capital gains. Profits and gains is for the regular business that she's making and earning money. Then if she sold an asset, she made a capital gain. And since they started earning a lot, they made FDs. They saved the money for their children. Then they had FDs. They made money deposits in the post office. So that went up to other sources. This is how you need to learn the sequence of the heads there. That's it. Loss from house property can be set off against. Salary is a very good head. House property is a very good head. It says whenever you face a loss, you can set it off against any head of income. Though salary and PGBP, they don't have friendship, because a businessman and a salaried employee can never be friends. Just learn it like that. You have to make something. In terms of law, don't try to learn it with a sophistication manner, because I can every time come to you and say, as such, as per the Income Tax Act 1961, the salary and the profit and loss from business and profession cannot be set off against each other, as salary is never negative and PGBP is not allowed to be adjusted against salary. That's one of the sophisticated way of learning it. But in the examination, do we remember it? Normally, no, because there are so many provisions. So best way is just remember that profits and gains and salary, they don't have friendship. That is why salary can never be negative. It is always positive. In case the business has loss, it can never be set off against salary. House property, everybody lives in the house. So ultimately salary, PGBP, capital gains, other sources, everything can be adjusted against house property. Any head of income. It's a very generous head. House, house means everybody can live in it. Okay, everyone, the next question. Go ahead and answer. Which of the following is not a capital expense? Installation expenditure of plant of a company, legal expenses for reduction of capital, commission to employees, or expenses for promoting a company? Go ahead. Which of the following is not a capital expense? We are not having an asset. Installation expenditure, legal expenses, commission, or expenses for promoting a company. Capital expense. Promoting a company, it is a deferred capital expenditure. This is actually called deferred revenue. Very close to capital expense. Let's look at others. Commission to employees for achieving the sales targets. This is a pure revenue. Just because people are giving us earnings, then we are keeping it. Rest are not. So in this case, I would go for C. Done, everyone? Done? Let's move on and talk about the next question. Okay. There it is. Next question. When the loan is taken for the education of child, the father is entitled to deduction of. Do you know this particular section is applicable for your education, your spouse's education, and your children's education equally? For whosoever you have taken a loan. If the loan is taken, actually I have to specify, the interest on loan is allowed as a deduction. Not the loan, but the interest. The father is entitled to deduction of interest on loan under what section? 80C, 80G, 80E, 80U. 80U is for the disabled, 80C is for tax saving, 80G is for charitable institution donations. So the correct answer is 80E. E for education, everyone. Learn it like that. Just a moment. Chaliye, let's continue. Next point is, which of the following is taxable gift? The one in which we'd be paying a tax. But which gifts are not taxable? If any individual gets, there's a story kind of thing that I've learned. If one individual in one particular year gets more than 50,000 rupees there, then the entire amount would be taxable for individual there, na? Okay, so if we talk about the individual there, but there are certain people who are out. Who are they? Uh, okay, that's me, wife. That means my husband is also my relative. Then the legal ascendants and descendants. Matlab we can say my father, my mother, my husband's father, my husband's mother, my brother, my sister, his brother, his sister, my our children, that means son and daughter, both. All of these people are to be considered as family. Okay, along with their spouses. The brother in terms of my brother, his wife the sister, her husband, they're also part of the entire family there. Okay, so there, which of the following is a taxable gift? Anything the family gives. There are certain ways of learning it. Family, inheritance, will, trust, the family makes a trust for you, any institution or any university giving you any certain amount of money, for the scholarships and all, right? So whatever gift you get in this case, marriage, then this is allowed and there is no tax on that. So what is taxable? The first is you got 75,000, you are exceeding 50,000, agreed, but that's from your own father. I think we have been getting one or the other thing from our parents in on every single occasion, our birthdays, marriages, when people have kids, when they were children. I think throughout the life, I think if we look at the pocket money which a child gets, then everything would have been taxable. So that means our parents are out of it. The friend gave 75,000. Is friend a relative? No. Is there any specific occasion? Not written. So let's see. Gift of 25,000 from a friend on the occasion of a birthday. Birthday 25,000 makes sense, but the point is 25,000. It is below the limit of 50. Gift of 1 lakh from the grandmother of the assessee. They are also family. Legal ascendants and descendants. Your ascendants as well as your descendants. They are also part of their family. Okay. So in this case, if the child gets something from their grandfather, grandmother, that is also relative, है ना? So in this case, the answer is 75,000 from a friend is out of it. Then, because this exceeds the amount of 50 and he's not a relative. Okay, everyone. Next question. In a factory refining the groundnut oil, total production of refined oil during the month of was 1,000 ton. The unrefined oil used in production was 1,020 ton. This loss of 20 ton was considered to be normal loss. If the total cost of the for the month was for the unrefined oil was 10 crore, then what is the cost of 1 ton of refined oil, assuming there is no scrap? Everyone, we got 1,020 ton of oil, but once we got it out, it was 1,000 ton after refining. That means 20 ton was lost, which they consider as normal. Whenever we have normal loss, how can we find the value of remaining tons? Na? That will be normal cost for normal output divided by normal output. That means we are agreeing that there is gonna be a loss. Acceptance of reality, na? How can I say, Nini, we won't be having any kind of losses? Why? You are working with oil, it get poured, it get wasted. It's very, very normal. So it's gonna be 1,000 for this. What is the amount? 10 crore. So you write 10 CR divided by 1,000. Remove the last 3 zeros. What are we left with? We're left with 1 lakh rupees per ton. For 1 ton, the value would be 1 lakh. This is a question from the area of processing. Okay? So in this case, the correct answer would be 1 lakh rupees. Done, everyone? Which of the following is not a direct cost? Material cost, non-manufacturing overheads, manufacturing or labor? Which of the following is not a direct cost? Material, non-manufacturing, manufacturing, labor. Direct means which is directly associated with the production. This is where I'm starting with the area of modules D altogether. We are done with the income tax portion. Now we are dealing with the area of direct cost. Direct cost means the cost which is related to the production altogether. Na? Material cost is direct cost. Non-manufacturing overheads, anything which relates to manufacturing is always direct. Which does not is indirect. So in this case, the answer would be B, everyone. Non-manufacturing overheads. Next question. Which one of the following can utilize the process costing system? Petroleum, hotel, shipbuilding, construction. Construction and shipbuilding uses contract. Hotel industry uses service costing. So what's left? Actually, na, shipbuilding and construction contracts are very long and lengthy tenure based contracts. So this is service costing. And then we are petroleum refinery. For the petroleum refinery, I think I can take it in the process costing. So it would be petroleum refinery. Done. Cost of material lost or destroyed is credited in the contract account, is debited in the contract account, debited to the costing profit and loss, or credited to the profit and loss. Whenever there is a material destroyed in profit and loss account, it doesn't go there. If you're making a contract account, now this is a hint, the question is talking about contract account. Under contract account, whenever material is entered, it is here to material. When it is lost, it would be here by loss, because everything that is entered into the contract is on the debit side. Whatever we lose is on the credit side. So in this case, the correct answer is going to be, it is credited to the contract account. Then direct material plus direct labor plus direct expenses. Books cost, cost of production, cost of sales, prime cost. Direct material, labor, expenses. Okay. In this case, the correct answer is going to be prime cost. If you've seen the cost sheet, direct material, direct labor, direct expenses are a portion of prime cost. Done, everyone? It is prime cost. In the cost sheet now, it is material, labor and expenses, which are direct. They make the prime. Then we enter the factory cost, which is called works cost. Then after this, we add up the admin costs. Okay, that gives us cost of production. Then we add up selling and distribution. Then it is called cost of sales. Then we add profit. What is left is called sales. This is the format for cost sheet. That's the format for cost sheet. Next point. I hope it's visible. Oh, give me a moment, please. Done. The preliminary expenses written off in the financial account. This is from module B. Added in the net profit. Achha, this is as per the cost sheet na. For cost sheet, it is not even included. Always remember, this is not a part of the net profit at all. Expenses written off in the this in terms of cost net profit as per cost account, this would be removed out of it. This is less. This is never a part of the cost sheet. Under cost sheet, the financial things are not included. Okay? Only the costing based things are included. So in this case, it's B, less from net profit as per the cost account. Then everyone, so that's it for the day. I hope this session was helpful for you. In case it was, what you can do is you can take up our courses. Just go on to the area of our website. Let me just show you where to go. The time is ticking away with every single day. The examination is approaching. What you need to do is go on to the area of www.adda247.com. Go on to the area of JAIIB, and there it is. Currently, what all the JIB aspirants can look forward to is our revision batch. If anybody is preparing for the next year, our Mahapacks are available at double validity. Then exam 80 to apply the code, and then you can get the 2.0. What is 2.0? Under Mahapack, you were getting both bilingual English medium batch, recorded batches which were done earlier, right? Those are now available to you. The complete batches which were completed earlier, along with the current batches, whatever batches will come in future as well, they are available till the time you have the validity going on. You get ebooks, you get the area of test series. Then these were something which was already available for you. Now, what is the difference thing that we are giving? We are giving marathon, we are giving mini marathon, we are giving mega marathons, we are giving you practice papers, and we are also having doubt classes with you. So overall, what's happening, everyone? Just because currently we are having the opportunity of this examination, we are coming up with this particular sale. You can use the code exam80 and get it. Along with that, if you're looking forward to it, then there's something else. In the JIB October 2023 area, you will also get our revision batches, right? So you can look forward to our revision batches as well. So check it out. It has started from September 15th. IE and FS is probably going on right now, and then the other batches would be starting soon, right? Just before the examination. So this will be really helpful to revise everything before time. You know? So that's it for the day, everyone. We'll be meeting in the next class. These are the courses. You can use the code exam80 and get these courses at a nominal